you're going to get caught up watching some Mickey Mouse shit, listening to some dumbass fucking clown. It's going to lead you down the primrose lane, and it's going to undermine any progress that you've made right now, or stifle any real proper progress. Making money is easy. It's so fucking easy, it's ridiculous. You are going to fuck it up. Like everybody else that ever does it and fails, they are the problem. But the weak-minded individuals are going to say, yeah, well, he didn't teach me this, or this thing didn't do what it was supposed to do. This indicator didn't plot it right here, and this, everything's this, that, thing. It's against me, and it's all rigged, and therefore I can't do it. It's rigged, and you can do it. That's the difference. I don't know why you people are arguing against me that there isn't an algorithm. It is absolutely an algorithm. It's advantageous for you to understand that, and when you do know that, it has parameters it has to operate within. It makes it more likely that what you think may happen is likely to happen versus some random bullshit that's going to come out of nowhere. I'm not saying that there can't be those types of things, these black swan events or over exaggerations in a market report or a data driver that comes out like 8:30, news embargo lifts and something comes out, red report, maybe an orange level report that comes out, and it becomes a little bit overzealous in its delivery and price. That's intervention. That's manual intervention. You don't know when and how, what degree it's going to be impacting the market. That's the risk. That's the risk. Even with my stuff, you don't know. I don't know when Brett's going to pull up and say, hey, you know what, ICT, I saw your fucking commentary, and guess what we're going to do today? Rip the other direction. But then eventually comes and goes where I want it to go. But that one day will change everybody's minds. That one day, that one little fluctuation in price. It might be a couple hundred handles, but eventually it goes where I want it to go. See, short term is intended to upset sentiment. That's what it's there for. These lower time frame fluctuations, that's not randomness. That is absolutely not randomness. It's all going in a specific manner to upset the current sentiment. And also, if there isn't any clear discernible sentiment where it's obvious, in other words, what do I mean by that? Where the market collectively is expecting it to go down or is expecting it to go up. They'll use these short-term intraday charts to cause these real dynamic dives lower or rallies higher. And then what you'll do is you'll see that and say, oh, well, shit, I was probably wrong. Let me change course and go the other direction. Watch the YouTubers that do live streams. Listen how they talk. Watch their body language. I love that they have the courage and the balls to get out there and do that. Because it's a wonderful human experiment to study how often they can convince themselves that they're absolutely right and they're wrong as shit. They are not paying attention to that aspect of their own trading. That's what holds them back. They're caught up in trying to be a YouTuber. They're trying to be a celebrity instead of someone that sits down in front of the charts at a specific time, knowing that the setup's going to be there. Wait for it. Don't anticipate it. And no, let me say it differently. Don't get ahead of it. We have to anticipate it because we're not reacting to shit. But don't try to get ahead of the setup. Don't think, oh yes, it's going to be I can trade and know there's going to be a fair value gap. I've done it before. I've told about it. I've shown examples of it in my executions. I've literally done it. But you don't need to have that. Oh, you're an asshole for not teaching it. You'll learn how to do it from experience. Reading institutional order flow. You'll know it. You'll know when that gap's going to form. You'll know where, when, and why. But see, you aren't giving yourself the chance to discover that stuff. Some of those things that you're asking me to teach you, they're things that you're going to acquire from your own exposure by doing the very thing that you're trying to avoid. Think about that. It's a paradox. You think it should be this, when I'm telling you it's not that, it's this. It's literally going in there trying not to make money. Read price. Try to know where price is going to go, why it should go there from a higher time frame perspective, and submit to that idea all week long. Think about it. I've been trading a live account, folks. It's not demo, it's live. And I tell you where I thought the market was going to go and what the bias should be, and I only execute in that direction. I've done so to show you that even though it might go up 200 handles for the day, and if you ain't in that first part of the move, you've missed 90% of it. I can fade that and stick with my bias. Oh. Wow. So what you're saying, ICT, is do the work in trying to find and determine where the bias is. Stick to trading with that model. Accept the fact that if I'm wrong or you're wrong and you get stopped out, it's part of it. But you can still find profitable trades even in up closed days going short. That might happen unplanned. You don't see it coming. And that's all part of your learning curve.